Like promised, we do have the management of KSB joining in with us, Rajeev Jain, Managing Director at the company. So yes, let's get started with the conversation because the company in the recent times has won a couple of orders. One is from Maharashtra for solar water pumps. Other one is from Oscar Group of around 267 crores as well. Mr. Jain, good afternoon. Thank you so much for
Good
joining in
afternoon.
with us. And I want to start with these recent orders, right? If you could talk to us more about the orders, by when will they start actually being operational in terms of when do you have to start working on the orders? Which other segments are you seeing more order inflows coming in from or inquiries coming in from?
Yes, in the last couple of weeks, we got these orders. One was the nuclear for the Kudam nuclear power station, and these orders is for the light water reactor there. And this order was around 260 crores with a delivery time of 12 to 14 months. So it's on a fast track project because these projects are all under implementation. So this was one of the criteria by which we could be successful. And since all the products required for these power plant and this order was available, we are already geared up to deliver it in this time period. So nuclear business for us has been quite bullish, and we have been in the past been successful in getting very critical orders for our heavy water reactors, specifically for GHAPB Gorakhpur Haryana project as well as Kaiga. And this was our first order in the light water reactor Kudankulam project. So it's a very good all-round performance in this nuclear segment. Apart from that, we are also got some good successes in the solar segment and with the government push in renewable energy, and specifically due to the Kusum scheme, which is going to install almost 2 million, 1.5 to 2 million pump sets. So this is where an area we have entered recently in the past 1 year, and we are seeing good success, specifically in the states of Uttar Pradesh, Maharashtra, and recently in Rajasthan. So we have got almost a letter of intent of almost 5,000 pumps, and the recent one was from Rajasthan, 1,000. And now this would be implementation all in this year, as and when we get all those work orders and implement them.
Okay. Also, if you could just talk to us about, in terms of what is the order book outlook that you have for FY25, and any talks with other big clients that you are in for a long-term contract as well?
Right now, our order book is a very healthy situation of almost 2,000 crore plus orders on hand. And we are looking in this year, the FY25, our year ends actually in the December. So in this year also, we are looking for a good order intake with a healthy growth over the last year. So as I mentioned, orders on hand is a very, very healthy situation. And you mentioned about the ongoing contracts. Yes, there are a couple of contracts which we have mentioned. One is this initiative on the Vande Bharat trains, where we are in discussion with Siemens, who are one of the main suppliers for locomotives, and there we are supplying our pumps for those locomotives, and this will be a long-term contract. So these are one of the examples, other than nuclear, which I already mentioned, which are there in the long-term contracts. And normally our business, the contracts are based on 12 months to 14 months delivery for our project business, other than, of course, nuclear and these long-term locomotives, which I mentioned.
Okay. So for this 2,000 crore order book that you just mentioned, what is the kind of execution time period and the margins that you can see on an aggregate basis from these products?
This 2,000 crores, half of it is coming from the nuclear business, where the time period is spread over the next, I would say, 3 years, considering also this year as well. And so all these are deliverable by 26 end. These are almost 16 pump sets. And I would say the margins, nuclear business, they are reasonably okay. I would say a lot of development costs goes inside these orders, but once we have supplied the first unit successfully, then the margins are all covered properly, because then the risk is minimized after you have supplied the first pump. So I would overall say the margins are pretty good, pretty reasonable. And also the solar orders are in the short term, and the remaining all order booking of almost 1200 crores, which is our normal day-to-day business, as well as projects which are less than 12 months span. And the margins, of course, has been under pressure because of a good amount of these 1200 has been in the oil and gas sector, which is a bit very competitive. But with our focus on having a proper product mix, that means increasing our share in the aftermarket business, which we call as Supreme Serve. We want to compensate that project business margins with our aftermarket, and as well as export business, which also is growing for us. So these are two segments where we intend to have a balanced product mix and improve our margins.
So say for 23, calendar year 2023, we did a margin of around 13 odd % for for calendar year 2024. Any guidance you can give us?
I think we are at a good level of margins, and I would say that our focus is also on a growth, profitable growth, and a year-on-year growth, at least in double digit, if not 15%. And so, if we are able to maintain that percentage, I think we will be pretty satisfied with that growth, and in terms of percentage, if we can maintain that.
Also, if you could tell us any pickup in inquiries that we have seen when it comes to the wastewater management related orders?
Yes, wastewater management, as you know, a good thrust from the government, good investments, and we are also improving our product basket there by bringing in technology from our principals, specifically for the wastewater segments, and we have introduced higher edge horsepower pump sets, which can go into big municipal locations. So there is a continuous increase, and we are intending to increase this segment for us, and we have got some recent successes in these orders, small orders. One was from Mumbai Municipal Corporation. So step by step, we go into this because we see this market as attractive, and as well as investments coming in. So we are just covering our product portfolio so we can get a bit of good accessible market inside there.
Right, and lastly, Mr. Jain, just want to know in terms of your outlook for revenue growth. Last couple of years we've seen the 23-22% growth. Do you expect higher growth now, given that the order book is so strong, inquiries are picking up as well? 23% growth, or maybe something higher is what one could expect, of around 26-27% and further?
As you see, in the last some years, we have maintained a quite aggressive growth, and last year was similar. So I think if we maintain these kind of growths, we ourselves would be very satisfied. This year, of course, being an election year, we have to wait and watch how this next quarter goes. But we are optimistic that the second half of the year will again see a pickup of the inquiries and the projects which are under execution or which are under discussion will move forward. So we expect these things to happen in the second half, but as you typically know that project business is a bit longer delivery times, so it may happen, the revenue may happen in the next year. But in spite of that, we have our orders on hand, and some of our nuclear pumps also lined up this year. So I would say that we would target a similar average growth rate what we've been having in the last few years, which is in the range of 17 to 18%, and that would be quite satisfying for us.
Okay, Mr. Jain, thank you so much for joining in with us this afternoon on ET Now, giving us an understanding in terms of the business, where we are seeing higher traction, as well as the trajectory in terms of the margins, as well as growth for the company as well. That was the management of KSB joining in with us to talk about their order book and everything in between. But yes.
If you like this video, then like, share and subscribe to ET Now.